Imagine a big casino, but instead of cards and dice, pigeons gamble on companies. One stock sells for $10 today. One day later, price jumps to $20. 1 week later, half a sandwich, already bitten. Billions move in and out every single day. Pigeons buy, pigeons sell, and some win big, but most don't. And yet, this casino controls everything. Your paycheck, your rent, even your retirement. So what are stocks really? Think of pizza. Without pineapple, of course, that's not really pizza. A company is the whole pizza and each slice is a stock. You buy a slice, then you own part of the pizza. Congratulations, you are now a pizza owner. Do not eat your own slice. Okay, so a stock is ownership, one piece of a company. But why do companies sell stocks? Easy, money. Companies need cash to grow. They could borrow from banks, but that means interest and debt. And banks yelling, pay me back now. So instead, companies sell stocks and get cash in exchange. Amazon sold stocks and used the money to build warehouses. Apple sold stocks and used the money to design shiny iPhones. Company sells stocks. Money goes in. They open stores and build factories. Company grows bigger. The stock you bought for $10 is now worth $20. Congratulations, you just cracked Wall Street. But why do pigeons buy these stocks? 2 reasons. First, dividends. Every time company makes money, they give some cash to the owners. You own one slice, so you get a bit of that. That bit is called a dividend. Second, price growth. If company grows, your stock becomes more valuable. You can sell it for more later. Buy stock for cheap, wait for company to grow, then sell stock for much more. Now you're a rich pigeon, but it doesn't always happen this way. Sometimes company fails, then price drops. Now your stock is worth less than a moldy piece of bread. You end up losing money. This happened to pigeons with Blockbuster stock. Netflix arrived and Blockbuster crashed. Stock became worthless. Pigeons sad. But pigeons aren't the only ones talking about stocks. Some of the most famous humans also love them.
If you're going to buy a stock, you should do certain things.
Right.
If you're not willing to do these things, you should leave your money in the bank.
The stock market since the 1920s has returned 9.5% annually.
You shouldn't buy stocks unless you expect, in my view, to hold them for a very extended period and you are prepared financially and psychologically to hold them.
But how do stock prices actually move? Why do they go up and down all the time? The answer is supply and demand. If more pigeons want to buy a stock, price rises. If more pigeons want to sell, price falls. But what drives supply and demand? Many things. Company performance, economy, inflation, interest rates, global events. But most important, psychology, fear, and greed. Sometimes markets make sense. Other times, completely irrational. Like pigeons selling crumbs because a billionaire bird posted a tweet. That's the problem. Stock prices don't just reflect value, they reflect emotions. Millions of pigeons changing their minds every day. One day, we are rich forever. Quit your job. Next day, everything is doomed. Pigeon moves back with mom. He is broke now, and this leads to risk. Yes, stocks have big rewards. Over decades, stocks beat bonds, savings accounts, even gold. But short term, very dangerous. History is full of crashes. Great Depression, dot-com bubble, 2008 financial crisis, 2020 pandemic crash. One day, pigeons living in penthouse. Next day, pigeons back in the park. Even individual companies can collapse. Enron, Kodak, Toys R Us. Big companies once, now nothing. Stocks can be very exciting, but they're also very risky. So, what does this mean for pigeons like you and me? Well, if you own stocks, this is obvious. Your money is tied to these shares. You can gain, you can lose. But even if you don't own stocks, you feel it too. Because all big companies are tied to the market. When markets rise, companies hire. When markets fall, companies cut jobs. First to go, the pigeon intern. But wait, who's gonna bring the coffee now? You can lose many things. Your paycheck, your bread, your house, all can change when stock prices crash. But where do these trades happen? If you own a stock and want to sell it, you need buyers. That place is the stock market. But what exactly is it? It's the system where all these stocks trade hands. Buyers meet sellers. Trades happen instantly. There are big places where these trades happen. New York Stock Exchange, Nasdaq, London Stock Exchange, and many more around the world. If stocks are apples, the stock market is the fruit aisle. You buy apples, you sell apples. Prices move depending on how much demand there is. Then pigeons start fighting over a shiny apple. That's the stock market every single day. And why does this matter? For companies, it's their way to raise money. For investors, it's their way to get rich. For the economy, it's like a giant thermometer. When stock indexes rise, it means pigeons feel good about the future. When they crash, it means fear. And the effects spill over. Markets crash, economy slows, and jobs vanish. It's all connected. Pigeon Googles, is cardboard safe to eat? Even pigeons who never touch stocks feel it. Bread costs more, houses get pricier, retirement looks shaky. So, how do pigeons actually invest? There are a few paths. Option 1. Buy individual stocks. Pick your favorite companies and hope they grow. Very risky, like betting all your money on one shiny bread. Option 2. Index funds. These are baskets of stocks. You buy one share, then you own hundreds of companies at once. Less risky, more stable, safer for pigeons who don't like big gambles. A famous one? The S&P 500. It holds 500 of the biggest companies in the US. Some pigeons even think it stands for 500 snacks and pizzas, and honestly, that sounds like a better investment. Option 3. Retirement accounts. 401k, IRA. These are long-term investments stuffed with stocks, bonds, funds, designed for the far future, for old pigeons who just want to retire one day. But one pigeon didn't know any of this. He filled his retirement account with bread. Not a smart move. Now it's all moldy. Pigeon will never retire. So let's step back. Stocks aren't just for Wall Street. They shape the economy. They shape jobs. They shape your life. When you hear Dow Jones falls, it's not just numbers. It can mean lost jobs, smaller paychecks. It can mean higher rent. So yeah, even if you never buy stocks, they still affect you. Sometimes good, sometimes bad. Okay, after all this, what's the big deal with stocks? At the core, stocks are simple. They're slices of pizza, pieces of companies, traded in one giant grocery store called the stock market. Prices go up when pigeons feel greedy. Prices go down when pigeons feel scared. Rewards are huge and risks are bigger than some pigeons can handle. But at the end of the day, stocks drive the world. They decide who gets rich, who loses, and how much bread costs at the store. So remember, stocks can feed your nest or leave you starving. They can grow your money or wipe it out. Subscribe to Support Pigeon so he can finally invest in the stock market and become a big finance bro.